Canada is caught in a population trap according to this recent report from National Bank. And this is really the reason why I think we just saw a population growth peak in Canada, and we will never see population growth as high as it just was in 2023. Make sure you watch the end of this video because I'm going to talk about why I feel this is the case and how that's going to impact the real estate market and the economy in Canada. So I'll start off with an article here from First Post. This came out on January 17th, so just a couple of days ago. It says, Ottawa says student visas to Indians are down by 86% in the last quarter of 2023, and there's no rebound in sight. Indians have formed the largest group of international students in Canada in recent years, with more than 225,000 permits, or 41% of all permits, going to Indian international students in 2022. This comes after a couple of unverified reports from Canadian publications and Indian publications that student visa applications had dropped by 40% in Q3 and Q4 of last year. So now we're actually seeing this show up in the data. And this is meaningful because if you look at the breakdown of student visas issued for the top 6, India as a primary driver of population growth in Canada. On the topic of post-secondary education, it's probably worth noting that post-secondary education in Ontario and in Canada is a really, really big business. Charlotte Littlewood, who's the head of UK India desk for the International Centre for Sustainability, says Canada makes $22.3 billion from tuition fees. That is more than our most major export, which is auto parts, at $19.2 billion. 76% comes from international students. Ontario takes up the biggest share with more than half of all international students. And there's actually a little bit of a strange mechanism from the population growth perspective where if a study permit is issued or if tuition is granted to a student, then an NPR has to be granted to them. And this is where I think the college system and province play a little bit more of a substantial role. And I'm surprised, to be honest with you, with the federal government under a lot of pressure in Canada from basically every economist at major banks, as well as tons of different industries and just generally voters, that we haven't seen them pointing the finger more, especially at the Ontario government, for the lack of regulation around these private colleges that are really taking advantage of students by charging them 3 times as much as domestic students, but also not actually giving them the degree that they would need to qualify for a good enough job to eventually get PR, permanent residency, because that's based on a scoring system. A little bit further context on Canada's population growth. If you look at this chart here, obviously Canada's population is spiking while the rest of them have sort of remained flat or are seeing nominal growth. Another way to contextualize this would be by looking at the fastest growing populations in the world, for which you can see we have the top 10 fastest growing populations in the world would be Syria, South Sudan, Niger, Burundi, Equatorial Guinea, Canada, Benin, Uganda, Congo, and Chad. So obviously one of these things is not like the other, and when you see Canada grouped in with a lot of these emerging markets as an advanced economy, it does just kind of put a question mark on that. Is, are we at risk of not being able to develop at the same rate of an emerging market due to labor constriction, bureaucracy, all of these things that come with being an advanced economy? And it's starting to seem like that's the case, and there's some disappointment forming among people who want to move to Canada to start a better life. Economic prospects aren't as good. Educational prospects obviously aren't where they want them to be. And so the other thing that I would want you to focus your attention on this chart is the peak that we see in the early 1980s in population growth in both, well, in all economies. And then what happened during the 90s was you started to see a drop in population growth in all of these areas. And a lot of that happened as a result of recession taking place, especially in Canada. And if we go back to the chart that was put out by the Bank of Canada that shows newcomers driving population growth, you can actually see in the early 1990s that there was a net negative non-permanent residence growth in Canada. Immigration, or the permanent residence stream, was sustained, and that's good to see in the context of Canada where we are right now. negative non-permanent residents is scary for a country where we are relying heavily on that population growth stream right now. And just for further context, if you look to the right-hand side of that chart, you can see just how heavily we are relying on non-permanent residents to drive Canadian population growth right now. The impact that this is having on real estate and real estate investments really comes down to looking at the way that property is valued based on income. So property is valued based on income using a cap rate formula in a lot of cases, which takes net operating income and divides it by the property value. And if you look at interest rates versus cap rates over the last 2 decades in Canada, you can see that the average Canadian cap rate, which is the yellow line here, basically trades within a 400 to 500 basis point spread over the Canada 10-year bond yield. And in current time, we're seeing it as tight as it's ever been, and it's really not backing off from that. So cap rates haven't started to expand as a result of bond yields and safe asset classes like GICs or bonds improving their yield. One of the reasons for this in Canada is due to this article right here. So this article says the government of Canada is unlocking $20 billion in new financing to build 30,000 more apartments this year. This is through the Canada Mortgage and Housing Corporation and the Canada Mortgage Bond Program. And what this is basically financing for CMHC's MLI Select program. And the MLI Select program is a way that builders can use CMHC taxpayer-insured money to finance the construction of rental housing. As long as they hit a certain amount of criteria, they can do so with as high as a 95% loan-to-value mortgage. So they're only putting 5% equity, or 5% down, you might call it, similar to the way a first-time homebuyer is able to get only 5% down through CMHC insurance. And in a lot of cases can get 30, 40, 50-year amortizations if they are hitting the criteria that CMHC wants to see in this program. And so the 50-year amortization is really a fascinating part, because based on this, they're really expecting these developers to almost socialize the cost of affordable housing by basically taking that cost and spreading it out over 50 years. So you need a developer who's willing to let or an owner builder who is willing to basically barely watch their principal on their mortgage be paid down over the course of ownership of the asset. Whereas before, we don't have all of these people lining up to lose money per se on condos and pre-construction houses in Canada anymore. And so the market really depends on developers willing to do this, because before you were able to socialize the cost of affordable housing by passing it off to these condo owners who were willing to be cash flow negative because they saw that prices might go up. And in the absence of that, we need somebody else to do that. And rather than actually making housing affordable, we spread the risk out over 50 years for these builders so that they can reduce the cost of ownership for renters in today's economy. This will and is getting a lot of housing built. I'm partners at a company called Land Bank. I do mostly research work for that group. We're seeing a lot of MLI Select loans and a lot of builders who can't sell their projects because of what's happening in the economy right now, because there isn't infinite demand, because there's not excess demand, because nobody can afford to buy a house, because interest rates are so high. A lot of them are pivoting these projects. If the numbers make work, they're pivoting these projects into rentals. So we know that in this cap rate formula here, net operating income divided by property value, the cap rate, the rate itself, has not changed. It's expected to stay the same because of this CMHC product that's propping the market up. So the question is, what happens to net operating income if we want to think about property values? And this is where the pure population growth in Canada really comes into play when we're thinking about real estate investment. So if we look at the Canadian population growth and rent CPI in Canada, and you chart those two charts side by side back to the mid 80s, you can see undeniable correlation in rent growth alongside population growth. We saw a lot of growth in rent as a result of population growth. Leader of that population growth, or which is international students, based on this article, Indian international students just dropped by 86%. So if we could see the red portion of this curve drop by even 50%, it's going to put a lot of downward pressure on rents until that curve normalizes. During this period, there was a lot of challenges with government work and a lot of these permit applications. I'm sure you remember Service Canada waiting in line. Everybody was talking about waiting in line at Service Canada for days. People who are here to get visas or become PRs or NPRs would have to wait in the same lines. And so there was a lot of people who were here that didn't show up in the data. And so a lot of that massive growth in that curve looks bigger than it is because it's backfilling this gap that you see here where there was a backlog in actual permit processing. Based on that backlog, as well as the huge decrease that we're seeing in Indian international student applications, this is why I feel like population growth in Canada just hit its long-term peak. I honestly think that it would be very surprising to see Canada's population growth ever hit the number that we just saw it hit. Okay, so now I'm going to get to the two reports here from people who are far smarter than I am. So this first report I'm looking at is from Desjardins. It says, how much will Canada's population grow? One of the things that they warn is that closing the door to non-permanent residents would deepen the recession expected in 2024. And this is something I really want you to think about because it's not just closing the door. That's not the only factor that the government has to worry about. They also have to worry about it happening organically. It seems to be that that's what the market is doing right now. In graph number 3 in this report, they show how Canada's population growth boomed as a result of these non-permanent residents and how they expect that to normalize and drop until 2026 and not pick back up. I think we've reached a point where there are polling numbers on it. The majority of Canadians do not support higher immigration, but Desjardins forecasts that we're going to see population growth basically drop from present day until 2026 and only just start to pick up. Like, that's a very, very slight growth after that. Another very interesting piece to look at is how they expect working age population growth. A lot of newcomers are increasingly likely to be working. And when we're looking at a Canada where with the Canadian government forecasted that the unemployment rate is going to hit 6.5% next year, and that I would say they're probably pretty optimistic. I've spoken with a couple of labor economists privately and publicly on my Twitter space recently where they've said that it would not be difficult to see Canada's unemployment rate hit 6.5% and maybe even the higher of 7 or over 7%. It seems very likely, especially with the amount of people, the labor force participation that we're seeing. That's more people looking for jobs, which means more people that are unemployed. So the rate at which population is growing is actually having a negative impact on unemployment. And this is a really important thing to think about because everybody thinks about interest rate cuts being good for the economy, and then once they realize that wasn't going to happen, a lot of people have capitulated on interest rates going down because we just saw a high inflation print in Canada. And bond yields are now, your fixed mortgage rates are likely going to end up in the 5% range. Maybe I'll do an explainer. Let me know actually in the comments if you want me to do an explainer on kind of how bond yields impact mortgage rates sometime. But the point here is that if rate cuts aren't the bull case, a lot of people in the real estate profession will move to immigration being the bull case. And now we've learned that immigration might actually be a bear case. Think about how many landlords right now are cramming students into a house, taking advantage of students who don't know the laws and what rents are and all of these different things. If that whole demand pool dries up because of what I'm illustrating in the data here, could really put a lot of pressure on some of those landlords that are already underwater. They're really just just getting by because they're able to put 10 people in a house at $500 to $1,000. If the student rental thesis kind of falls off, investor buyer is really the price floor in the real estate market, and it could actually, if you start to see that price floor kind of evaporate, I think there's probably another downstroke available on Canadian real estate as a result of that. So this is something that I'd be watching really closely, is what's happening in population growth, especially as a result of international students, because you can see in that chart that I showed earlier how correlated population growth is to rents, and rents are really what drives it. If investors are your price floor buyer, they're the ones who are gonna rush back into the market to buy if things get really bad. That's pretty much how it works. But their valuation is based on income. If their rents start to fall off as a result of that population growth, now we've got a little bit of a bigger problem brewing for potential supply coming back in the market and potential absence of that price floor buyer demand. The last report I'm going to look at here, really interesting. This comes from National Bank. It's a special report that came out on January 15th, National Bank of Canada Financial Markets. Canada is caught in a population trap. It says a population trap is a situation where no increase in living standards is possible because The population is growing so fast that all available savings are needed to maintain the existing capital labor ratio. And this is a really, really big mess for Canada to be in. I've been talking about this for a long time. If you followed me on YouTube or if you followed me on any other content, you know that I feel that Canada is rapidly heading for a renter's economy. And this report really just solidifies that for me, and they substantiate it with some solid economic data. So when you see Canada's GDP per capita in decline, right? We know that a lot of people will use the term Canadians are getting poorer. And it's true in a relative basis. There's less economy to be distributed to more people in Canada. And so on paper, we're getting poorer. Our GDP per capita, what we're able to extract from the economy is worse. How does that show up for the average Canadian? How does Canadians getting poorer actually materialize? From my perspective, the way that it's going to show up is the biggest expense that we have out of our income, which is housing. Most Canadians spend 30 to 50, 60, 70% of their household income on housing. And if the ability for us to generate more income is being squandered by what's happening, this population trap in Canada, that means less and less money we're going to be able to spend over time, or we're not going to see growth in our ability to spend more money on housing, which is already too much of our budget based on the affordability standards set out by the Canadian government. And so this creates a real problem. The way that this really looks is more and more people will not be able to step up from their current living situation into a better living situation. They'll never get their dream home. Most millennial Canadians will never own their dream home. Most Gen Zs will never own a home in Canada. And if you go look at other countries in the world like Switzerland or Germany, they have much lower homeownership rates than we do in Canada. And this happened because they're 200 or 300 years ahead of us when they were going through the same population growth or migration that we're currently seeing. What happened was there was so much excess demand for the housing, they had to start cutting up existing houses. And so if you look at the Canadian household size, the number of people in a house in Canada, it's been falling since our country was founded. But if you look at the average household size in the US, same thing took place, but in 2015 it started to revert. The average number of people in a house started to grow. And in Canada, our fastest growing household type right now is roommates. So we're seeing DIY density, starting their own rooming houses as a response to the government actually not being able to deliver affordable housing to individuals. If you drive through a brand new subdivision, you'll see 4 cars in the driveway and cars parked all over the street because a lot of these houses are occupied by multiple adults rather than families, the families that they're designed for. What this means is there's fewer houses and more people, and what happens is you have to take the existing housing stock and cut it up. And you can see this clearly illustrated as a policy design for the government. This is hidden in plain sight. The government is right now going around basically bribing municipalities into upzoning to a higher density, which is great. It's a good thing. I'm totally happy with this. BC just went to 4 units. Every residential lot in the city of Toronto now 4 units. And so we're seeing these incremental changes to density as a emergency knee-jerk reaction to try and deliver the most agile supply, which is a supply that already exists that can be cut up, rather than a high-rise that takes 6 years to build. That is being used as a policy response to try and solve this housing crisis. The inability to build new supply relative to the number of people that are coming here has hit the lowest that it's ever seen. And if you look at some of these past drops, this would be your 2008 crash. It's obvious that these correlate with recession. It would be expected that a recession will obviously fall somewhere on that line. So I think that's everything I have for today. I know this one was a little bit long, but it is a really important and exhaustive thing. I think I've given myself 2 ideas here for videos that I want to do in the future. One is about the bond yields, and then the other one is when we were looking at that supply deficit that I mentioned. Fraser Institute has a really good report on that, where it shows that supply deficit on a province by province basis. I'll look at that because I think it would be a good indicator of where we could potentially see the best places to invest in Canada. So I covered today what's happening with Indian international students and the huge drop that we're seeing in student visas. I covered the context of Canada's population growth and the context of why these schools are one of the biggest businesses in Canada. I talked about how fast Canada's population is growing and compared it to a couple of different economies, and how that population growth is basically directly correlated to rent growth, and why that has been keeping prices in multifamily and in real estate investments relatively sticky, and how if we start to see that rent growth come down, that stickiness that we're seeing could revert and could really become ugly for a lot of landlords who are really just getting by as a result of this ability to take a bunch of international students and put them into a rooming house.